Doesn't matter if you're buying your first home or buying your first investment property, I want to show you the step-by-step from start to finish. What is the process in purchasing your first property? You have to understand it also depends on what the market is at the moment. So if it's a very hot market, what's been sold the last 2, 3 or 4 weeks may be a lot different to what the market is now. Once your broker has ordered the valuation and received it, they'll pass a file back to the bank to move the application from a pre-approval to a full approval for you. Good day everyone, I'm your host Tony Xia and thanks for joining me on another episode of the Mortgage Chat. Today, let's have a chat about first home buyers and the process for first home buyers in purchasing their first home. So it's now December 2024. The last 3 or 4 months, we've actually seen a lot more inquiries and a lot more action with first home buyers coming back onto the market. Our business for first home buyers has actually gone up quite a fair bit in comparison to maybe 18, 24 months ago. Doesn't matter if you're buying your first home or buying your first investment property, I want to show you the step-by-step from start to finish. What is the process in purchasing your first property? So everyone, I'm from New South Wales, so a lot of the things I'm saying, it might be tailored more towards New South Wales, but to be honest with you, all the other states are pretty much exactly the same. The wording's a little bit different, but logistically, the end-to-end process is about the same, okay? So let's go with step number 1. So step number 1, doesn't matter if you're talking to a buyer's agent, a solicitor, or even a real estate agent first, you always have to talk to a mortgage broker to start off with because you have to understand what is your capabilities. And what I mean by that is what is going to be your borrowing power, what is your deposit, how far your deposit can stretch you, what sort of government schemes you can use, and what is viable for you. What I mean by that is we want to work out a loan amount that is sustainable for you and the repayments fits into your lifestyle. So we don't want you to live off dollar by dollar. We still want you to have a good life, right? So like I said to you, instead of getting a loan for $1 million where you're living off paycheck by paycheck, we want to get you a loan that is sustainable for you and can still enjoy a good life. Then after that, you know what you can and cannot do. Then you engage into a solicitor that you'll want to use. But for your first time investors out there, remember, not all solicitors do other contracts for different states. So if you want to buy in other states like, WA, South Australia, Melbourne, or even Northern Territory or Queensland, and you live in New South Wales, you have to make sure the solicitor in New South Wales can do purchase contracts in other states. If they don't, then you either have to find another solicitor in New South Wales that does, or you have to find a solicitor within those states. Step number 2, which is now getting a pre-approval once you've done the groundwork on step number 1. Now, getting a pre-approval gives you the confidence that a lender will let you borrow the money before you go out shopping. Right, so once you found a property, more than likely the pre-approval condition is going to be valuation or what the rental income is going to be, which I'm going to explain a little bit later down the track. Step number 3 is when you go shopping. And for a lot of first-time buyers out there, it doesn't matter if it's going to be an owner-occupier or investor or you're a first-time investor, I'll always get the same question, am I paying too much? What is a good price? For me, I'll always say to them, look, just see what the comparable sales are. So looking at what's been sold in REA or domain the last 2, 3, or even 4 weeks, most compatible to the property that you want to make an offer on, actually gives you a very good guide on what the price should be or around that anyway. But you have to understand, it also depends on what the market is at the moment. So if it's a very hot market, what's been sold the last 2, 3, or 4 weeks may be a lot different to what the market is now. So the market could still be going up, right? So what I mean by that is what's sold 3 or 4 weeks ago for 1 mil may be 1.02 mil at the current market when the market is very hot, and vice versa, right? What's been sold 4 weeks ago at 1 mil at a very slow market may only be worth 990 or 980 in the current market because it's a buyer's market. There's a lot more stock in the market. And it's pretty much a perfect example of the market in Sydney right now, which is December. The market is very slow. It's a bit stagnant. The prices has probably slowed down a little bit, if anything. So yeah, it's a good guide to what's been sold the last 3-4 weeks, but always keep a little bit of variance in between the prices that have been sold previously. Step number 4, So you have to understand the two methods of purchasing a property. Let's talk about the first one, which is a private treaty, which is what we call non-auction, okay? And is sale by negotiation. So the process with a private treaty is you normally want the solicitor to review your contract before you even make any offers on the property. But sometimes, when the property is very hot, the market is very hot, or your solicitor is very busy, sometimes you'll probably make an offer on the property before the solicitor reviews the contract. Now, let me tell you what the process is with purchasing under a private treaty. So ideally, with a private treaty, you want your solicitor to review the contract first. But because sometimes, the market could be very hot or there's a lot of demand for that particular property, your solicitor may not be able to just drop everything and review the contract straight away for you before you make an offer. So with a private treaty sale, the negotiation is always between you and the agent will refer that back to the vendor. And the negotiation is somewhat a three-way negotiation with the agent as a middle person. Now, if your offer is accepted, call it $1 million, you'll normally sign a contract and you'll pass that contract to your broker and solicitor straight away. When you sign the contract, you have to put a 0.25% holding deposit, which is generally non-refundable in New South Wales anyway. With other states, it may not be a 0.25% holding deposit. It may be a $2,000 deposit or a $5,000 deposit, which can be refundable. But in New South Wales itself, generally is 0.25% holding deposit, non-refundable of the purchase price. Okay, so when you put that 0.25% holding deposit and you sign the contract and date it, you'll give that contract to the solicitor and the broker for them to do their thing. Now, what you will get is a cooling off period. Some other states will call it a finance due date, but in New South Wales, it's called a cooling off period. On contract, it will normally say a 5-day cooling off period, but because the world's a bit more complex now, we like to ask for a 10-day cooling off period. Okay, so guys, generally now 10 days is the norm for cooling off period in New South Wales. 5 days just doesn't cut it, especially if valuations are involved. Okay, so you always ask for a 10-day cooling off period. But hey, do you know what? If your loan is approved before the 10 days, they can try to exchange the contract before the cooling off period finishes. It's not a bad thing, okay? So asking for the 10-day cooling off period allows you to have more time to get your loan fully approved. And what happens during that 10-day cooling off period? Well, your solicitor will review the contract if they already have it, and they'll negotiate with the vendor solicitor in relation to any special clauses that needs to be amended or any terms and conditions in the contract that needs to be amended. The broker's job is to move the file from a pre-approval to a full approval. So to do that is they need to order the valuation. They have to make sure, or hopefully, the valuation comes back at what the purchase price is. And hopefully, if it's an investment, they have to ensure or hopefully make sure the rental income that we use for your pre-approval is the same as the rental income that is noted on the valuation report. If those two stack up, then pretty much they can move the file over to a full approval, right? Because all the conditions with the pre-approval would have been most likely met during the pre-approval stage, and your pre-approval 99.99% of the time would generally only ask for subject to valuation and rental income. They may ask for updated payslips and updated statements, but that is generally easy to provide anyway. Okay, so once your broker has ordered the valuation and received it, the valuation stacks up, the rental income stacks up, they'll get updated payslips or statements if needed. They'll pass a file back to the bank to move the application from a pre-approval to a full approval for you. The thing you need to do during the cooling off period is to get a pest and building report if you're buying a house or even a townhouse sometimes, and also a strata report if you're buying an apartment or even a townhouse. Anything that's strata related, you'll get a strata report. And generally, you can order that through your solicitor, or you can ask who the strata managers are from the agent, and you can order one through them directly. And generally, it could cost around $650 depending on how big the complex is or how complex the strata report is. Okay? So I want to elaborate a little bit more on the broker's job with the valuation. So ideally, the valuation should be coming back at what the purchase price should be, right? So, for argument's sake, if you purchase for $1 million and the value and the bank's valuer values at $1 million, perfect, right? But sometimes, however, there are very rare occasions where the valuation doesn't come back at what the purchase price was, where the purchase price was $500,000 and the valuation only came back at $450,000. So in these scenarios, the bank will only lend at $450,000. So the extra $50,000 you have to fork out of your own pocket if you decide to proceed with the purchase of the property, because the bank will not lend off a percentage of $500,000. They'll lend off a percentage of what the valuation is. And same thing with the rental income noted on the valuation report if you were to purchase an investment property. For argument's sake, you need a rental income of $500 per week to get a loan of $500,000. Now, if the property is an owner-occupied property, it's not rented out, and on the valuation report, it notes a rental income of $450,000, not $500,000, well, therefore, you're $50 short. So therefore, that $500,000 loan will decrease, right? And you need that $500,000 loan. So if you can't get that $500,000 loan, well, the next thing is you have to fork out more deposit, or you can't proceed with purchasing the property anymore. So in this 10-day cooling off period, if your solicitor comes back saying, yep, contract all good, your pest and building or your strata report comes back all good, your broker has your full approval and you're ready to go, then sweet. If you want to proceed with purchasing the property, you put the remainder of the deposit that's needed, right? So in New South Wales, it's either going to be a 5% deposit or a 10% deposit at the end of the cooling off period that you have to put down if you want to proceed with the property. So, for argument's sake, if you purchasing a property for $1 million, you can negotiate to either put a 5% deposit or a 10% deposit after the 10-day cooling off period. For argument's sake, let's say you're going to put 5% deposit at the end of the cooling off period. So you have to minus that 0.25% you originally put, and you just have to pay the remainder of this 4.75% deposit into the real estate agent trust account. But you have to notify the solicitor and the agent that you're happy to proceed. Now, if any of the three things that come back adverse, the solicitor saying, yep, no good with the contract, the pest and building or the strata report comes back very bad, or your finance is not sorted, or it's not approved, or for any other reasons that you may not want to proceed with the property anymore, you can pull out the purchase, right? The only thing is you lose your deposit of 0.25%, especially in New South Wales. With other states, you may or may not get your deposit back, okay? So that is the process of purchasing under a private treaty. So with an auction, there's a lot of pre-work you need to do before the auction day, because once you win the auction, there is no going back, right? So what I mean by this is there's no cooling off period if you win the auction. Once you sign the contract and you're the winner, you have to proceed with purchasing the property. And with the valuation, if the bank values your property lower than what you purchased it for, you may get yourself in a little bit of trouble. So essentially, you have to do all your checks, make sure the solicitor is happy with everything before you go to auction on auction day. Okay? The biggest risk with auctions is actually valuations. But luckily, 99% of the time, the valuation actually came back at what the purchase price has been for us with auction purchases, right? But that's because a lot of our clients actually done a lot of groundwork to ensure they haven't overpaid on the property, right? So it's very important, because if the valuation comes back lower than what the purchase price is, you're probably going to get yourself in a lot of trouble, especially if you can't cover the shortfall of what you purchased it for and what the bank valued it at. So the good thing for you consumers out there is a lot of brokers can actually do valuations before you go to auction. So what I mean by that is some lenders actually allows us to do some sort of online valuation so we understand what the price is before you go to auction. However, some banks actually don't even require a valuation, and they'll accept what you purchased the property for. So let's say, as an example, you're looking to go to auction next week and your highest bid is going to be $1 million. So your broker can actually go onto the bank system, put in $1 million as the purchase price, and see if the bank will accept this $1 million as the valuation, which that eliminates a lot of the BS and the risk involved in going to action, right? So if the bank would accept the purchase price of $1 million, therefore, you're pretty confident that, hey, do you know what? If I win the auction next week, for $1 million, I probably won't be at any risk that the valuation may come back low because the bank will already value it at $1 million and they'll accept the contract price, therefore no valuations needed. So that's just a little trick for you first-time buyers out there. Before you make an offer, before you go to auction, you can actually ask your broker to do some sort of valuation on the bank's portal to see if they will accept that price. So once you proceed with purchasing the property, your loan's fully approved, the next thing is signing documents. So most lenders these days don't require you to sign the documents by hand. They'll actually send you an email or they'll actually make you set up a login through the net bank. You can sign the documents online, which saves a considerable amount of time compared to what it is a few years ago. The only thing that may require wet signing is the mortgage documents because the Lands and Titles Office in certain states, call it Queensland, ACT, Northern Territory, requires that document to be hand signed. So you probably have to sign these documents by hand, and most likely you'll also have to get JP'd. And once it's JP'd, signed, dated, you'll have to mail these documents back to the bank yourself. Step number 6, ready for settlement. So, once you've signed the documents, the bank has received all the required documents like insurances or your bank details, even the mortgage docs, they're ready for settlement. They've vetted the documents, and once they've vetted it, they've ticked everything off. It's ready for settlement. I'll get a notification. Your solicitor will get a notification to say it's ready for settlement. Okay. Now, once it's ready for settlement, so the only thing you have to do is make sure you have sufficient funds in the account that's open for you and created for you for that lender for settlement. What I mean by this is probably a week before settlement, your solicitor will give an estimated breakdown on how much money you need to transfer into that bank account for settlement. And that amount could be the remainder of the deposit, stamp duty, solicitor costs, changeover costs, and what I mean by that is, prorated water rates, council rates, strata, etc. Okay, so it's an estimated cost where they'll want you to transfer it into this account. It's just a bank account. It's under your name. It's pretty much just an everyday account. Once you've transferred that money into the bank account, there's nothing you will need to do. Step 7, settlement booked. So once your solicitor have booked everything for settlement, there's nothing you need to do, nothing I need to do. Everything that needs to be done will be handled by your solicitor through a banking system called PEXA, where the bank, and the vendor solicitor will interact with each other. We have no involvement. We just sit back and we chill out and we just wait for settlement date. Step number 8, which is your settlement date. And once it's settled, you'll get a notification from your solicitor, from your broker, and potentially even get a text to your phone. And apart from that, you go pick up your keys and you're now the proud owner of a new home. So everyone, I know this episode was a little bit more longer, a little bit more long-winded. That's because there's a lot of things to explain for you first-time buyers and first-time investors out there. But however, I really hope you enjoyed and got a lot of this episode and understand the whole process from start to finish. As always, guys, please give this video a like, give this channel a follow. I hope to see you on the next episode of The Mortgage Chat. I'm your host, Tony Xia, and you have a great day, great Christmas, and I'll see you next year.